I'm here today with Marc Ricciari, Belmont Insurance Group, and we're going to talk about flood insurance. The different types of insurance that you really need down here in the low country, premiums, things like that, flood zones, and I think you'll find this really interesting because you're going to have homeowners insurance when you live down here, and Marc is the perfect guy to navigate this. So I'm here with Marc Ricciari, owner of Belmont Insurance Group, here locally in the low country of South Carolina. And I wanted to do this video with Marc because I'm hearing a lot of conflicting information about flood insurance. And if you're not in a high-risk area, you might not even need it. And prices are being quoted, they're way lower than what they are if you're not in a high-risk area. And I'm doing all the talking, so I'll let you talk. So go ahead.
Thanks for having me, John. So I think first it's important to understand why flood insurance might be considered in the buying process. Most every homeowner's policy out there has a very specific exclusion that deals with, in layman's terms, ground up rising water, right? Or an inundation of water on normally dry land. Mm-hmm. And so homeowners insurance policies that provide protection against wind and fire and lightning a lot of times don't include a flood endorsement. Okay. So that's why the National Flood Insurance Program was established years ago, was to provide protection against flood with the backing of the federal government. However, things are changing, right? We've seen the emergence of private flood insurance carriers over the last few years that are through private insurance companies like Lloyd's of London, and of course the federal program, and then what we refer to as excess flood insurance. So, the question of should I buy it or should I not buy it? While a lot of times that's is a risk preference question, a risk tolerance question for our buyers. Just know that you more than likely don't have it included in your homeowner's insurance price.
Right.
So, in terms of changes that are going on in the flood insurance market, right? So, we used to rate flood insurance by the zone that you were in. I heard you mention high risk, low risk. Well, that's all changed, right? There's still maps out there, flood maps out there, but we don't really look at those anymore. What we look at, there's new technology that has emerged, catastrophe modeling, right?
Well, it's interesting because in the MLS, when you look at a home for sale, you'll look at flood zone. There's a tab, and you click on that, and it's AE, X, all these zones.
Yep.
I believe Zillow's got a whole nother terminology on this because customers show up and they're talking about Zillow's rankings, and I'm not sure what you're talking about, but this is in an X zone, and you're good. So are you talking about something different?
Great question. So the federal government, right, through FEMA, puts out flood insurance rate maps, or what they used to call rate maps. Those are indicators now. If you've got a federally backed mortgage and you're in an AE zone, that lender's going to require that you buy flood insurance.
Right.
Okay? What you're referencing on Zillow is more than likely some sort of catastrophe modeling that they've utilized to actually give that property a rating as to whether or not they think it has a propensity to flood, right?
Now see, as agents, we're not in on that program. Right. Because they're on Zillow, we're on the MLS.
Yeah.
And, interesting. Okay.
I don't want to talk out of turn specifically to Zillow, but I've seen the ratings, and I presume that they've contracted with a company that has catastrophe modeling built in.
Sure.
Property, right. I think they've got other scores on there, hurricane and earthquake, etc. Okay. So, but what we look at, first of all, we're proponents of flood insurance because if you don't have it and you experience a flood, it's federal disaster assistance.
It's a bad scene.
It's not good. So, we're proponents of at minimum the federal program, but also looking at private flood options that can where you can purchase more coverage than $250,000. Remember, the federal program's maximum building limit is $250,000, right?
Right.
And so we've got some private flood carriers that'll go from $1, less your deductible, up to the value of the building, $5 million, say. So we can do any number in between there. And then we've also got the traditional federal program that does the $250,000, and then we can layer flood insurance on top in the form of excess flood insurance. So we can generally buy as much flood as needed, depending on the risk tolerance for that specific client.
But if you're not in a high risk area on my MLS map, let's just say, the bank is not going to require you to have flood insurance.
Correct. If you're in the X zone.
Yes.
Yep.
Is it a good idea to get it anyway? I mean, I've got people in Sun City, Margaritaville that are not in it. Should I get that? Should I get that? What's the answer to that one?
It's generally very affordable in those areas that you just referenced. So transferring at minimum $250,000 in risk to the insurance company for
how much?
Anywhere from $400 to $1,000, depending on where you're at.
All right.
Most likely makes sense, right? Because remember, we tend to think in worst case scenarios as humans. We think storm surge comes through and takes our house off, but it could be simple as this, lagoon system behind us, overflowing its bank and causing damage, right?
Wow. So, yeah, you're right.
So it's important to know where you've got gaps in your coverage and understand how you can.
You're selling a lot of it, aren't you?
We sell a lot of flood insurance. Yes.
I mean, as far as they don't really need it, but they're getting it anyway.
Well, you're going to get a proposal from Belmont no matter what you do.
Okay, there you go, right there.
Whether you buy it or not is up to you, but ultimately, we want to make sure that you're aware that it's not covered in your homeowner's insurance policy more than likely.
And this area was replatted, rezoned recently, a couple of years ago.
2020-ish, 21.
Yeah, right.
Yep.
So,
and
it actually is good for the consumer. I mean, I was in a high risk area. I'm not anymore.
Yep. And so that's based on a piece of paper that they drew a map on that looks like my 4-year-old.
That's why I bought it. It looked good. It was pretty.
But the risk didn't change, right?
Yeah.
In fact, I would tell you the risk is probably higher today than it was even 20 years ago, just given everything that's happening in the climate. Stronger storms, those types of things. So understand it and then mitigate it through insurance techniques. And it doesn't mean you need to buy the full amount, but buying limits that are appropriate are important.
A house that's directly on the ocean on Hilton Head Island. Okay, they're usually very nice homes. The flood insurance for a house like that, can you ballpark a number on that?
So when those map changes happened,
Yeah.
FEMA also rolled out a new rating system. It's called FEMA Flood 2.0, and it takes into a number of factors: distance to the flood source, the type of soil that the house is built on, the foundation type, the value of the home, etc. All those factors go into it, and that's how they determine the rate. So it's very hard to ballpark.
Yeah.
Insurance,
But
flood
it's
insurance
expensive.
cost. It can be.
Yeah, right.
Yeah.
Okay.
Can be.
Anything else our viewers would like to know about flood insurance in the Low Country?
I think it's an important aspect of the buy-in process here. Certainly moving here, it's a beautiful place to live and to enjoy the outdoors, but be respectful and understand the risk and then make decisions based off of that.
That's good information. I'm going to put Marc's information down below in this video, and he's also going to send me a
flood insurance surge maps. So,
that would be great.
So these are maps that you can find the location of the house, and then you can,
Is that like a PDF or what is that?
No, it's an interactive map where you can choose a category 1, 2, 3, 4, 5. It'll kind of tell you the expected storm surge above, normally dry feet-wise above normally dry land. Just keep in mind, it's telling you worst case scenario, so the perfect storm, so to speak.
Okay. Anyway, down below is Marc's information. Call him directly. His phone number, email are going to be right there, and he'll be standing by to take your questions and work with you on a policy, right?
Yep, absolutely.
Anyway, I appreciate it.
Thanks, John.
Thanks.